WTI crude oil is above $65 per barrel, while silver has broken the 120 handle. Hello traders, Fawad Razakzadeh here, market analyst for City Index. Let's get into it. Oil prices have broken out of their consolidation pattern in the last few days, and this is partly driven because of raised concerns that the US might strike Iran, and that could in turn disrupt oil supplies in the region. And so we've seen the Brent oil climb to near $70 per barrel, and WTI here has broken the $65 barrel. This level is a very important technical level, given that this is precisely where the previous selling started back in September of last year. This level was also the low back in September of 2024, when oil prices made a temporary low there before eventually breaking down last year. And now we are retesting that level again. So historically, this level has been quite significant, not only because of the fact that it marks the previous year's lows and stuff, but also it's a psychologically important level as well, isn't it? So keep an eye on it. And if oil can reclaim this level decisively in the next few days, it could really kick on from here and climb towards 70, who knows. But the potential for a short-term reversal is there, given that prices have already rallied in the last 3 days. And so in the short-term outlook, prices are a little bit overbought, which could trigger some profit taking. However, it's mostly a fundamentally driven story regarding Iran. So things could move fairly quickly. And if the US were to strike Iran, then we could potentially see a lot more gains for crude oil prices in the near-term outlook. But from a purely technical point of view, the trend is now starting to look positive, given the fact that we've broken above the 200-day moving average. Remember, the previous time we broke above the 200-day average, couldn't really hold there after a few days or weeks holding above it. Then we went back below, and again here. So the 200-day moving average has been quite an important indicator. Every time we've gone back below it, we've seen sharp sell-offs. And the breakout above the 200-day moving average has consistently been short-lived. So let's see if this time it is a different story. After all, prices have been trying to form a longer-term base around the $55 level, $55 to $60 level, where we have previously seen a double bottom low in April of last year. And the same level was tested in December as well. And we've bounced from there on at least 5 occasions I can count on this chart. So this area is very important, and the fact that we are now climbing above the 200-day moving average and holding above it in the last few days. Is this the turn in the tide for crude oil? Is the key question. So moving forward then, the key levels to watch in terms of support. Well, 62 was previously resistance, and we've broken cleanly above that level now. So prices may not retest this level, given that we've broken away from it and moved away quite nicely. So keep an eye on the highs of the previous sessions, like yesterday's high at 63.56 and the day before that 62.63. These levels might be tested in the coming days or weeks even. And the key question is, can oil hold above those levels? So moving forward, ideally, we'd like to see oil prices from a bullish point of view hold above prior resistance region, which was this area around 62 to around the 200-day moving average. And if it can hold above this area now, things are going to look bullish for oil prices. Oh, that's a horrible color, isn't it? Let's just change it to another neutral looking color. So that's a key support area to watch in the near future, should prices dip back down in the coming days. In the near future, we may well see continued buying interest at higher levels. So from a trading point of view, it may make more sense to zoom in to your lower time frames and see if you can spot tradable opportunities there. But from a more macro, longer term view, this zone is now very important to hold as support the area between 62 to 60, call it $63 per barrel. If oil prices were to move back below the zone, obviously we'll have gone back below the 200-day moving average as well, in which case things will start to look bearish once again. For oil to go back below here, we need to see a de-escalation in geopolitical risks and signs that oil supply is rising more than it's needed. So in the long term, it could well go back below this area and trigger a fresh wave of technical selling below it. But for the time being, clearly the path of least resistance is to the upside. What you're looking at here is not a cryptocurrency. It's the price of silver, obviously. And the commodity has been going up and up and up and up in the last several weeks and months. And a few days ago, we saw the potential for a reversal when silver created this inverted hammer candle on the daily chart, which kind of suggested that we may have seen a top. But these candlestick patterns need to show immediate downside follow through for it to be validated. As you can see here, it bounced right at the previous day's high and held above it. And on the next day, it went on to create a bullish candle. So that immediately invalidated the bearish setup here. And for that reason, I quickly dropped my short-term view that it might go lower. Today, it has hit the 120 handle, which is a significant level, isn't it? It's crazy to even talk about 120, given where silver was trading just a few months ago. So, yeah, the move up has been remarkable, obviously. Can it continue to push higher? Well, who knows? As traders, we just need to keep an eye on it and trade it from one level to the next. So zooming into the daily time, to the hourly time frame here, you can see the levels more precisely. 120 is a big psychologically important level, and we've tested this level now. I wouldn't be surprised if we see some profit taking once again, but for as long as the structure of higher highs and higher lows remain intact, the path of least resistance will remain to the upside. However, if we start to see the breakdown of a few levels, then things will get interesting. For me, this level is very important to watch. I'll just put a line around it. I'd say 115. 115 is a prior resistance. It was the last resistance area, if you like, before silver broke to a new record high, taking out the high of that hammer or inverted hammer candle we saw on the daily chart. So this was the last significant resistance prior to price breaking out to a new high. Therefore, this area of support needs to hold. And if I put a box around this zone, it is within this area where the last buying took place, right? That caused prices to rally all the way to 120. So if silver were to break below this area, then things will start to look bearish. At least in the short-term outlook anyway. And for me, a move below 111.25, this low right here, which was, I'll tell you why this low is important. This low right here. This was a previous low that was briefly taken out. Price caused the formation of a false break reversal here, and there was no supply below it, right? And it quickly rejected and it went higher. So there's no reason for prices to come back all the way to test this level once again if the trend is still bullish. Therefore, if silver were to come back below 111.25, at that point you'll have to consider the downside risks quite seriously, which could then pave the way for some significant follow-up technical selling given how overbought prices are and everything else. But for the time being, though, the trend is clearly bullish, and I wouldn't be surprised if it just continues to push higher, because it's just been crazy, hasn't it? I mean, it's taken out level after another. So drawing a few Fibonacci levels here from the most significant high to the most significant low here. The 127.2% extension comes in at 121.90. Then the 161.8 is at 127.17. Those are the next Fibonacci-based extension targets for silver to reach for, or potentially reach for. It's another question whether it will get there, but at least you have some targets to keep an eye on. Also, don't forget that between these two levels, we have the next psychologically important level of 125. So that's your additional target on the upside should the bullish momentum continue. For more market updates and insights, head over to City Index, and I'll see you in the next one. Take care.